On the item card in Business Central, there are some fields relevant for the finance department. That's the cost and posting tab here. And I will just run through the fields shortly to explain what they mean and what they do. First of all, the costing method is set up when you create the item. That's the way of handling the cost on inventory for this item, of course. The standard cost is normally calculated if it's a production or an assembly item. You can calculate it from its bill of materials, but it's also possible to enter manually. And it's set up normally for items with variants that you would like to use and handle the variances separately. Unit cost is the cost that the item is handled on in the inventory. So the unit cost reflects the amount on inventory, and it comes from the standard cost if the costing method is standard, and it comes from the average cost if it's FIFO or average, etc. So we have separate videos explaining how this cost is calculated. The indirect cost percentage is set up if you want to add cost to the last direct cost, if you want FIFO on inventory, or you want standard and you want to add some costing percentage on your inventory for items that could be from handlings or item charges that you doesn't post through the item charges functionality. So it's a way of raising the cost if you have other costs to the item that you would like to be reflected on the inventory. Last direct cost is the last direct purchased cost or manufacturer's cost on the item that is automatically calculated and entered here on the item card. The net invoiced quantity is the quantity on inventory that is invoiced, meaning it differs from the inventory fields. If we go up here, the quantity on inventory here, I can see it's 87. The net invoice quantity is 67, meaning that we have 10 pieces that is either received or shipped that hasn't been invoiced yet. The checkmark for cost is adjusted is displaying whether all the entries for this item has been adjusted with the cost adjusting batch job, or if it's set up automatically to adjust the cost. So this means the item ledger entry has been adjusted with the correct cost after all the postings. And after the adjust cost item entries batch job is run and all the item entries is adjusted, it's possible to post this cost into, or the corrections into the GL. And if the cost is posted into GL, it says yes here. So this is just displaying whether or not the GL is updated with the actual inventory cost from the item ledger entries. Special prices is normally used for purchase and salespeople. Actually, this is for the salespeople, and it creates special prices, special sale prices. The posting group is set up when you create the item. The general product posting group determines where the cost on this item goes into the income statement. The VAT, of course, and it's normally filled out from the, or filled in from the general posting group. The VAT posting group determines, of course, the standard VAT for this item, and it works together with the VAT setup from customers or vendors when you create order lines. And the inventory posting group determines where in the balance the cost of this item is entered. So this is the way of handling where you see the item cost and the revenue or purchases on this item in your chart of accounts. You can set up a default deferral template, and if you set that up, when you purchase or sell this item, it's possible to actually make it deferral automatically, and you can see how deferrals are working in a video on deferrals. If you have to report into the Introstat, you could also define tariff number here and country region code, which is some of the fields you need to set up when reporting Introstat. So these are the fields on items relevant for the finance department.